Smarter trades, simple rule. That's what separates the operator who lasts in this game from the gambler who comes in shouting and goes out broke. You see, speculation isn't about being busy, it's about being right. And most men can't stand the waiting, but they'll throw away their stake in the excitement of constant action. Now, tell me, are you the sort who feels uneasy if you don't have a trade on? Because if you are, the market will teach you the cost of impatience quicker than any man alive could. When I say simple rule, I mean just that. The fewer moving parts, the less chance you've got to break down. A trader who fills his head with a dozen signals, 20 different opinions, and 50 predictions ends up paralyzed or reckless. The smart operator boils it down. Watch the tape, study the chart, trust the action, and above all, protect your capital. It sounds too plain, doesn't it? But isn't it always the plain truth that slips past a crowd looking for mystery? I learned early that prices talk clearer than men. When a stock acts strong, that's because big money is making it strong. And when it acts weak, it's because heavy selling is pressing it down. Now, let me ask you, do you really believe you or I can outwit the weight of capital that moves those prices? Of course not. The trick is not to outguess it, but to recognize it and go with it. Smarter trades. Simple rule, go with the line of least resistance. You wouldn't row against the current in a river, would you? Then why on earth would you fight a trend? But don't mistake simple for easy. That's the greatest misunderstanding in speculation. The simple rule is hard to obey because it means ignoring your emotions. When you're up a little, your greed whispers to hold on forever. When you're down a little, your fear screams to get out right now. Both are liars. The market doesn't care what you feel. It only cares what the balance of buying and selling is doing. Do you follow me there? The tape is honest, even if it makes you uncomfortable. A man once asked me how to make a fortune in stocks. I told him, it's not the thinking that makes the money, it's the sitting. But how many can really sit? Most want action. They crave it like a drunk craves liquor. The smarter trade is the one you wait for, not the one you force. And waiting is the hardest work in this business. Think about it. When was the last time you profited more from doing nothing than from doing something? In trading, that's most of the time. Charts will show you what the crowd cannot hide. Higher tops and higher bottoms mean strength. Lower tops and lower bottoms mean weakness. It doesn't take a Harvard degree to read that, just the discipline to believe what's in front of your eyes. Why do men lose money? Because they let hope cloud their vision. They buy a weak stock and hope it gets strong. They sell a strong stock and hope it gets weak. Hope is for churches. In the market, you need proof. Are you still hoping in your trades, or are you waiting for proof? I've seen men go broke searching for a sure thing. They buy tips, they read rumors, they chase the news, and still they end up cleaned out. Why? Because they never stopped to ask whether the market itself confirmed their idea. A simple rule: if the tape disagrees with you, you're wrong. That's it. No debate. No argument. Smarter trades don't fight the market, they listen to it. Does that sound harsh? Maybe. But the market is the harshest teacher alive, and the tuition is always paid in losses. Capital is your soldier. Lose your soldiers and you can't fight another battle. Protect them first, make them earn only when the odds are best. That means cutting losses short, always. And yet, how many traders do the opposite? They cut profits short and let losses run. Tell me, haven't you felt the temptation to snatch a small gain because you're scared to lose it, while holding on to a loser in the hope it turns around? Every trader has, but the smarter man reverses it. He takes losses quickly and lets winners run. Simple rule. Difficult to practice, but essential. I'll tell you another truth. Big money isn't made in the day trades. It's made in the big swing. Catching the major move. Riding the trend when everything lines up. That's where fortunes are built. Not from scratching a point here and there. So ask yourself, are you trying to be busy or trying to be right? The market doesn't pay you for activity, it pays you for accuracy. Don't mistake motion for progress. Smarter trades are the ones that wait for the big opportunity and then take it with size. Patience and discipline, those words bore most men, but they're the backbone of every real fortune on the street. Anybody can get lucky once. Anybody can make a winning trade here or there, but can you do it over years? Over decades? That's the true test, and the answer depends on whether you follow the simple rules or keep breaking them. Do you want excitement, or do you want wealth? Because the two rarely come together in speculation. The crowd is always wrong at the turns. That's the other rule. When everyone is buying and boasting, the wise trader gets cautious. When everyone is panicked and selling, the wise trader sharpens his eyes for bargains. The public buys the most at the top and sells the most at the bottom. And will you be public or professional? If you can't stand apart from the crowd, you'll suffer with the crowd. Smarter trades mean thinking independently, not following the herd. Money mindset matters as much as chart reading. A man who cannot master himself cannot master his trades. Greed, fear, impatience, ego, these are the real enemies, not the market. The market only reflects them back at you. Do you know what happens when a man doubles up on a losing trade because he can't admit he's wrong? He destroys himself. And when he takes a small profit too quick because he's hungry to prove he's right, he strangles his own fortune. Discipline is wealth. Without it, no chart can save you. Let me ask you straight, how many times have you watched a stock go up after you sold it too early, or recover after you refused to cut it? Every trader knows that sting, but the smart ones learn from it. They see the mistake and vow not to repeat it. The fools make excuses, blame the market, or chase after the missed move. And tell me, which side do you want to be on, the learner or the loser? Charts don't lie, but men do to themselves most of all. They read what they want to see, not what's there. A rising stock that breaks support and rolls over clear sign of weakness. Yet the hopeful trader will tell himself it's just a pause. A falling stock that surges above resistance, clear sign of strength. Yet the fearful trader will mutter that it's too high. Smarter trades mean seeing the chart for what it is, not what you wish it was. Simple rule. Hard truth. Every great move begins with accumulation or distribution. Quiet phases where the big operators load or unload while the crowd sleeps. If you can spot those, you can join them before the crowd wakes up. That's where the edge lies, not in guessing news, not in chasing tips, but in reading the footprints of money itself. Do you see why I say watch the tape? Because it tells you where the real action is, even when the headlines say otherwise. And never forget, the market can stay wrong longer than you can stay solvent. Betting against the trend because you think it's too high or too low is suicide. A stock is never too high to buy, nor too low to sell, if the trend is still intact. Do you believe that? Many don't, and that's why they lose. They let opinions guide them instead of action. Smarter trades follow the path of least resistance, not the path of personal judgment. There's a rhythm to markets, like tides to the sea. You don't command them, you ride them. Traders who fight tides drown. Those who wait for the turn and go with it, they prosper. Isn't it strange how men accept nature's law in everything but money? They know they can't change the seasons, yet they think they can argue with a bull or bear market. Smarter trades accept the rhythm and flow with it. Simple rule, eternal law. Now, I've told you about patience, discipline, cutting losses, letting profits run. These aren't secrets, they're old truths. But the question is, why don't men follow them? Because they want something for nothing. They want wealth without effort, victory without discipline. And the market exists to punish that weakness. Do you see yourself in that mirror? If you do, then good. Awareness is the first step to change. In the end, speculation is a serious business for serious men. You wouldn't open a store and stock it with goods you knew nothing about, would you? You wouldn't run a farm without understanding crops, seasons, and soil. Yet men come to Wall Street and trade without knowing the first thing about trends, charts, or capital management. And then they wonder why they go broke. Smarter trades. Simple rule, treat it like a business, or it will treat you like a fool. I could tell you stories of my own wins and losses, fortunes made and fortunes lost. And every time, the cause boiled down to one thing: following the rules or breaking them. When I obeyed the market, I prospered. When I disobeyed, I paid. That's all speculation ever is, a battle of obedience to truth versus surrender to emotion. And in that battle, the man who follows the simple rule always comes out ahead in the long run. So let me leave you with a question. Next time you look at a chart, will you read it with honest eyes, or will you twist it to fit your hopes? Will you obey the simple rule, or will you gamble with your capital? The choice is yours, always yours, and the market will show you the cost of whichever you choose. Wait for confirmation, not hope. That one sentence could save a man years of losses if he truly understood it. The market isn't moved by your feelings, your wishes, or your impatience. It moves by the weight of buying and selling, and that weight leaves a trail in the action of prices. When you act without confirmation, you're gambling. When you wait for confirmation, you're speculating with sense. Now, tell me, which are you doing most of the time? Hope is the oldest disease of traders. A man buys a stock because he thinks it's cheap, or because a friend whispered a tip, or because he wants to feel clever. And when the stock turns against him, he doesn't cut it. He hopes. He hopes tomorrow will bring a rally. He hopes the market was just playing tricks. He hopes his judgment will be proven right. But the market doesn't pay for hope. It punishes it. Have you ever sat staring at a position going red, telling yourself, maybe it'll turn around if I just give it one more day? That's hope talking, not confirmation. Confirmation is action in the price itself. A breakout that holds above resistance, not just touches it. A stock making higher lows after a period of weakness. A trend line tested and respected. These are confirmations. They are facts, not dreams. They show that forces greater than you are moving in the direction you want to trade. Isn't it better to have the weight of proof on your side before you risk your soldiers? Or would you rather march them into battle blind, hoping the enemy will stumble? Men lose fortunes because they confuse possibility with probability. Anything can happen in the market, yes. A weak stock can rebound, a strong stock can collapse. But what is likely to happen? That's what confirmation tells you. It tilts the odds. A wise trader doesn't need certainty, he needs odds tilted in his favor. Hope gives you nothing. Confirmation gives you probability. And speculation is nothing but playing probabilities with discipline. Consider a stock in a long decline. The hopeful trader says, it can't go any lower. He buys it because he thinks he sees a bottom. But where's the proof? The chart still shows lower tops, lower bottoms, weakness on every rally. That's not confirmation, that's a trap. The smarter operator waits until the stock stops, making new lows, builds a base, and then breaks out on volume. That's confirmation. Which side would you rather be on, the hopeful man buying weakness, or the disciplined man buying strength after proof? The same applies in selling short. The hopeful bear attacks a stock because it looks too high, or because the papers call it overvalued. He sells into strength without proof the tide has turned. Then he watches the stock climb higher, squeezing him until he covers in pain. Meanwhile, the disciplined bear waits for a cleared breakdown, a failed rally, a broken trend, a lower low. That's confirmation. He doesn't argue with the tape, he follows it. Do you see the difference? One man trades on opinion, the other on fact. Hope is emotional, confirmation is practical. Hope whispers that you deserve to win, that your idea must be right. Confirmation doesn't flatter you, it simply shows what is. And that's why it's so hard for most men to wait. They crave the thrill of action more than the security of proof. They want to feel right immediately, even if it means losing in the end. But the real operator learns to resist that craving. He waits. He lets the market prove itself before he risks a dime. Have you built that patience yet, or are you still lunging at shadows? Remember, the market is full of traps designed to lure the hopeful. A quick spike upward that collapses just as fast. A false breakdown that snaps back and rallies. If you buy or sell on hope, you'll be caught in those traps over and over. But if you wait for confirmation, if you demand follow-through, retests, volume, and sustained action, you avoid the bait. Simple rule. Don't trade the first move. Trade the second. The first move is noise, the second is confirmation. Think back how many of your losses came from jumping too quick. And confirmation isn't only on the chart. It's also in your own plan. Did you size your trade correctly? Did you set your stop where it belongs? Did you prepare for the risk as much as for the reward? If not, then you're hoping again, hoping that luck will bail you out of poor preparation. The smart man confirms his own readiness before he confirms the market's. A sloppy entry, an oversized bet, a missing stop, these are all signs of hope, not discipline. Do you see now how deep this rule runs? Patience for confirmation is what separates the plunger from the operator. A plunger bets because he wants action. An operator waits because he wants results. The plunger is satisfied with the feeling of being in a trade. The operator is only satisfied with profits. So the plunger buys because he hopes the market will reward his eagerness. The operator buys only after the market shows its hand. Which one are you training yourself to be? There's a rhythm in confirmation too. After a long base, a breakout is more meaningful than after a short pause. After heavy volume, follow-through matters more than a single tick. The longer the preparation, the stronger the confirmation. Hope doesn't measure any of that, it just leaps. But if you want to last in this game, you must measure. You must learn to read the character of the move, not just the surface. Because the market doesn't confirm in the same way. Every time it requires judgment, and judgment comes from study. Don't mistake this for hesitation. Waiting for confirmation is not the same as being timid. Timid men never pull the trigger at all. Disciplined men wait until the trigger is clear, then act without fear. That's the balance. You don't want to act too soon, but you also don't want to freeze forever. The market rewards courage, but only after proof. Have you found that balance yet, or are you leaning too far to one side? The greatest operators I ever knew didn't move often, but when they did, it was always after confirmation. They didn't buy dips in a downtrend, just because they hoped it was cheap. They didn't short rallies in a bull market, just because they hoped it was overdone. They waited for the turn, then struck. And they struck hard, because confirmation gave them confidence. That's how big money is made, not from constant small stabs, but from big trades backed by proof. So the next time you're tempted to buy because a stock looks low, or sell because it feels high, stop yourself. Ask, where's the confirmation? If you can't point to it on the chart, you're gambling. If you can't show it in the action, you're hoping. And hope is the most expensive commodity on Wall Street. It has bankrupted more men than any crash or panic. Proof costs patience, but hope costs your fortune. Which price would you rather pay? Patience is the real edge in trading. A man can have all the knowledge in the world, but if he cannot sit still, he'll lose it faster than a fool with no system at all. The market rewards discipline, and discipline begins with waiting. Most traders are restless by nature. They feel naked without a position, uneasy without constant action. But speculation isn't about doing something every minute, it's about waiting for the right moment and then acting decisively. Do you really think every tick deserves your money, or is it wiser to wait until the odds lean heavily in your favor? Think of it this way. The market is a battlefield, and your capital is your army. Would you send soldiers into every skirmish, or would you hold them back until the decisive battle? The impatient man sends his troops to every minor clash and finds himself exhausted before the real war even begins. The patient man waits for the big opening and then commits with strength. Who do you suppose walks away with victory? The man who wasted his ammunition, or the one who saved it for the crucial fight? Patience means resisting the itch to guess bottoms or tops. How many traders have bought too early, thinking they caught the low, only to watch the stock sink lower? And how many have sold too soon, convinced the top was in, only to see prices soar higher? That's the cost of impatience. The market doesn't care about your eagerness. It doesn't reward you for being early. It only rewards you for being right. And right in speculation comes not from guessing, but from waiting until the tape confirms your idea. Haven't you ever noticed how most of your mistakes were born from acting too soon? A patient trader doesn't confuse activity with progress. He knows that sitting still is part of the work. Watching, studying, and waiting are just as important as pulling the trigger. The crowd thinks money is made by constant motion, by always being in the game. But in truth, Most fortunes are made by waiting long stretches for the rare chance when everything lines up. The patient man sits idle for weeks, sometimes months, if the market offers no clear opportunity. The impatient man can't bear the silence. He trades for the sake of trading, and the market takes his money as punishment. Which one are you closer to right now? Patience is what lets you catch the big swing. Prices don't move in straight lines, they move in cycles, waves and trends. The big profits come from riding those waves, not from scratching small points here and there. But to ride them, you must wait for them to form. A bull move doesn't happen every day. A bear collapse doesn't happen every week. They build, they take time, they require patience. The operator who cannot wait for the tide to turn will never ride it when it does. And yet, how many traders drown because they threw themselves into the sea before the tide had shifted? Patience is also what saves you from ruin. Suppose you miss an entry. Impatience tells you to chase it, to grab at the price because you fear being left behind. But how often does chasing lead to buying at the top, just before the reversal? The patient man resists. He tells himself there will always be another trade, another chance. He knows the market is eternal and opportunity endless. So he waits, and when the crowd that chased gets punished, he still has his capital intact. Isn't that the smarter way to live? To keep your ammunition dry instead of wasting it in panic, and think of the mental side. Impatience clouds judgment. It makes a man nervous, excitable, reckless. Patience, on the other hand, clears the mind. It allows you to see the market without the blur of urgency. An impatient trader reads a chart and sees what he wants any excuse to jump in. A patient trader reads the same chart and sees what is signals that confirm or deny his plan. Which vision would you rather trust, the clear or the clouded? Patience isn't laziness, it's controlled readiness. The patient man isn't asleep, he's alert, studying, preparing. He knows what he wants to see, and he waits until he sees it. The impatient man doesn't wait to see anything, he just acts. And that's why the patient man looks inactive, but strikes with precision when the time comes, while the impatient man looks busy but ends up exhausted and broke. Do you understand how dangerous activity can be when it isn't backed by patience? Even in holding a position, patience is the edge. Most traders cut their profits too quickly. They get nervous at the first sign of profit, and they grab it before it grows. That's impatience. But the real money comes from sitting tight, holding through the normal fluctuations and waiting for the trend to fully play out. The patient man rides the bull until it's truly over. The impatient man jumps off halfway because he can't stand the waiting. And who ends up with the bigger profits in the end? Patience is what protects you from yourself. Every trader battles greed, fear, and ego. Impatience is how those enemies sneak in. You fear missing out, so you rush. You're greedy for quick gains, so you chase. You want to prove you're right, so you force a trade. Patience blocks all of that. It makes you sit still until the market itself proves the time is right. It makes you accept that your feelings don't matter, only the action does. How many losses in your past can you trace back to impatience? More than you'd like to admit, I'd wager. A patient trader doesn't care about being first, he cares about being right. The crowd wants to boast, I caught the exact bottom, or I sold at the exact top. That's vanity, not trading. The patient operator waits until the turn is clear and confirmed. He may miss the very first point, but he catches the bulk of the move. And in the end, that's what builds fortunes, not bragging rights, but big swings captured with patience. So ask yourself, are you trading for pride, or are you trading for profit? Patience also teaches humility. It reminds you that you don't control the market. You can't demand that it move when you want. You can't force it to give you opportunities. All you can do is prepare and wait. That waiting humbles a man, but it also makes him stronger. It teaches him respect for the market's rhythm. And respect, in this business, is survival. Do you respect the market enough to wait for it, or do you still try to command it with your own timetable? Think of all the mistakes tied to impatience, overtrading, chasing, cutting winners, holding losers, ignoring stops. Every one of them springs from the same weakness, the refusal to wait. And every strength of a great operator: timing, discipline, Clarity, confidence springs from patience. You see now why I say it's the real edge. Knowledge without patience is wasted. Systems without patience are useless. Capital without patience is squandered. But patience, even with a modest system, can build a fortune if practiced long enough. Patience doesn't just keep you in line with the market. It keeps you in line with yourself. It slows you down, steadies your mind, and forces you to think before you act. It protects you from the traps of hope and fear. It helps you see opportunities that others miss because they're too busy chasing noise. Patience is power. It's the one weapon the crowd will never wield, because the crowd cannot sit still. And that's why the crowd always loses. So the next time you feel the urge to trade just to be in the action, ask yourself, is this patience or is this impulse? If it's impulse, you already know what it'll cost. If it's patience, you'll know because you'll have proof, clarity, and readiness. That difference is your edge, the edge most traders never master. Discipline over emotion builds wealth. That rule may sound plain, but it cuts deeper than any technical indicator or trading theory you'll ever come across. The market isn't a place where intelligence alone brings success. It isn't about who can draw the fanciest chart or read the longest report. It's about who can keep control of themselves when the pressure rises. A man who can't master his emotions cannot master his money. Tell me honestly, how often have your trades been ruined not by the market, but by your own fear or greed? Every trader knows what should be done: cut losses, let profits run, size properly, follow the plan. But knowing is nothing without doing, and doing requires discipline. The moment money is on the line, emotions flare up. You see red and panic. You see green and get greedy. You tell yourself little lies to justify breaking the very rules you swore to follow. That's the difference between the professional and the amateur. The amateur is ruled by emotion. The professional rules over it. Which one are you working to become? Fear is the most common thief. It whispers in your ear when you see a trade slipping. It makes you hesitate when you should act, or it makes you run when you should sit tight. Fear convinces you to cut a winning trade too soon, because you're scared it might turn against you. Fear keeps you out of good trades because you imagine ghosts in every shadow. And worst of all, fear locks you into losing trades because you're too frightened to admit you were wrong. Have you ever watched yourself sit frozen, staring at a loss that grows with every tick? That's fear chaining you to the chair. Then there's greed, the other great destroyer. Greed makes you double down on a loser, hoping to claw back what you lost. Greed makes you hold a winner long past the point of reason, only to see it collapse and wipe away your gains. Greed tempts you to take oversized positions because you want riches overnight. Greed tells you to break your own rules because you're hungry for more. And greed, like fear, always collects its fee in losses. Do you recognize how often greed has whispered in your own trades? Discipline is the antidote. Discipline cuts through emotion with clear rules that are followed no matter how you feel. You set a stop, you obey it. You plan your entry, you wait for it. You size your trade, you don't exceed it. You define your profit-taking, you stick with it. Discipline is mechanical where emotions are chaotic. It doesn't care about pride, it doesn't care about ego, it doesn't care about excitement. It only cares about survival and consistency. Without discipline, even the best strategy crumbles. With discipline, even a modest edge compounds into wealth. The market is designed to provoke your emotions. Every tick up or down is bait. When you see prices surge, greed pulls you in. When you see them fall, fear drives you out. The crowd reacts to every move like a puppet on strings. But the disciplined trader doesn't dance to that tune. He knows the market will tempt him at every turn, so he prepares in advance. He writes down his rules. He fixes his plan before the battle begins. And when the market tries to play him, he sticks to the plan. Isn't it true that your worst decisions happen when you improvise in the heat of the moment? Discipline means taking small losses without complaint. Most traders can't bear that. Their pride gets in the way. They think a loss means failure, so they hold on hoping to prove themselves right. But the disciplined man takes the small cut quickly and moves on. He knows it's just a cost of business, not an insult to his ego. Pride is expensive in this game, but humility expressed as discipline saves fortunes. Which voice do you listen to more often, your pride or your plan? It also takes discipline to sit tight. Sitting through a winning trend isn't easy. Every small pullback stirs up fear. Every headline shakes your confidence. The undisciplined man grabs the profit too soon, then watches the stock double without him. The disciplined man holds because his rules tell him the trend is still intact. He doesn't sell because he feels nervous. He sells because his system signals the exit. That patience, born of discipline, is where the big money comes from. Do you remember how many times you strangled your own profits just because you couldn't sit still? Money management itself is discipline in action. Risking only a fixed percentage, never letting one trade endanger the whole account, resisting the temptation to over-leverage, these are acts of discipline. An emotional trader always bets too big because he wants it all right now. A disciplined trader sizes modestly because he values survival above thrills. And survival is the first requirement of success. Without it, there's nothing left to build on. Do you see how discipline isn't just a virtue, it's the very foundation of trading? Discipline isn't glamorous. Stop bleeding money in trades now. That's a phrase I've heard more times than I can count. And yet, most men who come into this game never understand what it really means until their account is nothing more than a graveyard of broken hopes. Why is that? Why is it that the very thing they swore they would never do becomes the only thing they end up doing? I'll tell you. Because the market has a way of stripping you bare. Not with a whip, not with a knife, but with your own mind. You see, money isn't lost in the market by accident. It's lost because of stubbornness. It's lost because of impatience. It's lost because a man wants to be right more than he wants to be rich. Haven't you ever found yourself clinging to a position just because you didn't want to admit you were wrong? And while you sit there, paralyzed, the tape keeps ticking, and the loss keeps growing until what was once a scratch becomes a wound, and that wound becomes a hemorrhage. That's how traders bleed to death. Now, I don't speak about this from books or theories. I speak because I've bled myself. I've sat in my own little office staring at the tape, watching the market laugh at me. I've taken tips, ignored my own rules, doubled down on losers, and prayed for reversals that never came. Do you know what prayer gets you in Wall Street? The Undertaker. It's not the big losses that kill most men, it's the steady drip, drip, drip of small ones that they refuse to cut. They say, I'll give it just a little more time, but time is not on your side in this game. Time is the enemy of a bad position. Did you ever notice how fast a loss runs against you, compared to how slow a profit crawls in your favor? That's no accident. That's the law of the market. And yet, men keep hoping the law will be suspended for them. Tell me, has the market ever bent its rules for you? Has it ever shown you mercy because you begged it to? I learned long ago that the tape does not care who you are. It doesn't care how smart you think you are, or how much studying you've done. It doesn't care about your plans, your dreams, your family, or your rent money. The tape only reflects one thing, the combined will of the crowd, expressed in dollars. And when you fight that crowd with nothing but your ego, you will lose. Every time. But here's the cruel trick. The same mind that lets you make money in this business is the very mind that makes you lose it. A trader who once cut losses fast, the moment he gets cocky, the moment he thinks he has the market figured out, he stops cutting. He hesitates. He lets that little red line grow, and soon enough, the habit of discipline is gone, replaced by the habit of hope. Do you know the cost of hope in Wall Street? It's measured in bankruptcies. The reason men bleed is simply they refuse to take the small medicine, so they end up in the grave. Think about it. Isn't it easier to accept a scratch than to wait for a bullet? Isn't it easier to step aside when you're wrong than to watch your fortune melt away? And yet, why don't men do it? Pride. That's all it is. Pride and the desire to be right. But this business doesn't pay you for being right, it pays you for making money. I'll give you an example. A man buys a stock at 50. It dips to 48. He tells himself, it's only 2 points. It'll come back. At 45, he says, "This is ridiculous. It's oversold." At 42, he mutters, "The market's wrong. I'm right." By the time it hits 38, he's no longer trading, he's praying. And when it finally collapses to 30, he either sells in despair or he goes broke holding on. Now tell me, what killed that man? Was it the market? No, it was himself. It was his refusal to take a 2-point loss that destroyed him. He thought he was saving himself pain, but all he did was trade a scratch for a bullet wound. And the strangest part, that same man, after licking his wounds, will do the same thing all over again. Haven't you seen it? Haven't you felt it yourself? Why do we repeat the same mistakes, even when we swear we'll never do it again? Because in this business, memory is short, and hope is eternal. That combination is deadly. Let me tell you something, the market is the most expensive place in the world to learn how to control yourself. And yet, most traders refuse to learn until they've paid tuition with blood. They want the excitement, the gamble, the story. They don't want the discipline. But the discipline is the only thing that saves you from bleeding out. Now, you might be sitting there asking yourself, "All right, but how do I stop bleeding? How do I fix it?" And I'll answer you in the simplest way I know: cut your losses. Cut them quickly. Cut them without hesitation. Don't argue. Don't rationalize. Don't pray. Just cut. The very moment you know you're wrong, the very second the tape proves you wrong, get out. No hesitation. Do you hesitate when your hand touches a hot stove? No, you pull it back immediately. Why? Because you know delay means pain. Why then do traders leave their hands on the hot stove of a bad trade? Because they're not afraid of pain, they're afraid of admitting they were wrong. And that's the tragedy of trading. A man will lose his entire fortune just to avoid the sting of his own pride. The truth is, trading is not a game of making money, it's a game of not losing it. Money takes care of itself when you're right. You don't need to force profits. The tape will carry you. But when you're wrong, if you don't act quick, the market will carry you out. That's the whole secret. Stop bleeding by refusing to bleed in the first place. Simple, isn't it? But tell me, do you think simple means easy? I can tell you, after a lifetime in this game, that nothing is harder than doing the simple thing. Nothing is harder than clicking that button and taking the loss while your mind screams at you to wait just a little longer. Do you know why it's so hard? Because it feels like defeat, and men hate to feel defeated. But let me ask you, what's worse, admitting defeat quickly or dragging it out until it destroys you? Most traders never learn this. They treat each trade as though it were a personal battle, a duel between themselves and the market. But the market is not your enemy. It's not even your opponent. The market doesn't care about you at all. The only enemy you face is yourself, and if you don't master that enemy, you will bleed. I remember one time I held a losing position far too long. It was early in my career, back when I thought I had the market figured out. The stock went against me, and instead of selling, I doubled up. You know the old gambler's trick: throw more money at a bad hand, pray for a turnaround. But the tape didn't turn. It went further against me. My loss doubled, then tripled. And I sat there watching, sick to my stomach, refusing to act. Do you know what I told myself? It can't go any lower. That's the most expensive sentence a trader will ever say. Of course it went lower. By the time I finally got out, I was nearly wiped clean. That lesson cost me a fortune. And yet, looking back, it was the cheapest lesson I ever bought, because it taught me to never, ever let a small loss turn into a big one. But I didn't learn it once. I had to learn it a dozen times, each lesson carved into me by the market. You might think you're immune, that you're too smart, too disciplined. But let me tell you, the moment you think you're immune is the very moment you're most vulnerable. Haven't you noticed that? Haven't you noticed how the market waits for your cockiest moment to humble you? So if you really want to stop bleeding money, you must give up the idea that you'll ever conquer the market. You won't. The best you can do is master yourself. And mastering yourself means cutting fast, cutting clean, and never looking back. It means having rules and following them no matter how much it hurts. Because the only way to survive this game is to treat survival as your first profit. Now, You may be asking, but what if I cut a loss and then the market turns back in my favor? Doesn't that mean I missed out? And the answer is yes, sometimes it will. Sometimes you'll cut and watch the tape reverse, and you'll feel foolish. But let me ask you, what's the price of insurance? Isn't a small premium worth paying to protect yourself from ruin? That's what a cut loss is. It's the premium you pay for staying alive. And as long as you're alive, there will always be another trade. Always. But a dead trader makes no trades. Small losses are medicine, ignore them, and they become fatal wounds. That's not just a catchy phrase to toss around in a lecture hall. That's the lifeblood of every trader who has ever survived in this business longer than a season. You see, men come into the market full of confidence, full of clever ideas, with charts, theories, and a heart beating with ambition. They think the real game is about catching the big win, the home run, the story they'll brag about at the club. But do you know what keeps a man in the market long enough to ever see those big wins? It's not brilliance, it's not courage, it's not even luck. It's the simple, painful willingness to take the small medicine. Now, let me ask you something. When was the last time you took a small loss willingly, almost gratefully? Most men never do. They fight it, they resist it, they talk themselves out of it. They say, it's just a dip, it'll come back, and maybe once in a while, it does. But sooner or later, the same attitude that saved them for a day destroys them for a lifetime. Because when you get used to ignoring the scratch, you get accustomed to living with infection. And infection in this business spreads fast. I've seen men who could have been great traders bury themselves under nothing more than a refusal to swallow that little pill of pain. They treat the small loss as an insult, something beneath their pride. But tell me, is it pride you're after, or profit? Do you want to be the man who brags about never being wrong, or the man who still has money in his account when the dust settles? The truth is, every small loss you accept is like paying an insurance premium. It's not fun, it's not exciting, but it keeps you safe. And the irony is, the small losses are the only thing keeping you alive long enough to see the big gains. If you fight them, if you dodge them, if you pretend you don't need them, you'll wake up one morning and find that what was once a manageable little setback has turned into a fatal hemorrhage. Haven't you noticed how fast a bad trade can snowball when you refuse to cut it? How quickly that paper cut on your account balance becomes a deep gash, and then a wound you can't recover from. When I say small losses are medicine, I mean they're not just tolerable, they're necessary. They're part of the cure. Every trader who lasts knows that the cost of admission to the next opportunity is sometimes nothing more than a 2-point loss, a quick exit, a shrug of the shoulders. That's the fee you pay to stay alive in this game. And yet, most men choke on that fee. They see it as robbery instead of tuition. Think of it this way. Would you rather pay the doctor for a minor checkup, or wait until you're on the operating table for something far worse? In trading, cutting a small loss is that checkup. Ignoring it is like pretending you're healthy while the disease spreads quietly through your system. By the time you finally admit the truth, it's too late, and the cost is everything you've got. And here's another thing, do you know why small losses hurt so much more than they should? Because they bruise the ego. It's not the dollars that sting, it's the confession. It's having to look yourself in the eye and say, I was wrong. And most men would rather risk ruin than admit that. Haven't you done it yourself? Haven't you sat there watching a trade drift further and further against you, inventing reasons why you're still right, why the market is wrong, why you just need to give it more time? All because you couldn't stand the idea of taking a small hit. But the market doesn't grade you on pride. It doesn't hand out trophies for stubbornness. The only score that matters is survival, and survival comes from cutting the infection before it spreads. A scratch is nothing, 2 points, 3 points, a minor wound you can shake off. But when you let it grow, when you let that infection fester, it becomes the end of you. I remember once watching a man who started with $500,000 in the market. He was clever, too clever for his own good. Every time a trade went against him, he'd say, It's just noise, it'll come back. He let a 2-point loss become 5, then 10, then 20. He still wouldn't cut. He called it conviction. I called it suicide. Within a year, he was out of the game. Not because the market hated him, not because he lacked brains, but because he refused to swallow the small pill. He wanted to skip the medicine and still stay healthy. But the market doesn't work that way. And don't fool yourself into thinking this rule doesn't apply to you. Every man believes he's the exception, the one who can dodge the law of small losses. But tell me, have you ever met a trader who went broke from taking too many small cuts? I haven't, but I've met 1,000 who went broke from refusing to take any. Small losses are the guardrails on the mountain road. They keep you from going over the cliff. They sting, yes, but they save your life. The cliff is ruin, and ruin is what waits for the man who insists on ignoring the guardrails. Do you think the market cares about how strongly you feel, how convinced you are, how much you've invested in your story? It doesn't. The market will send you over the edge just the same. The discipline to cut quickly is not just about money, it's about building a habit. Every time you cut a small loss, you're training yourself to survive. You're teaching your mind that survival comes first, that ego doesn't pay the bills, that safety is the seed from which profit grows. Ignore that habit, and you're teaching yourself the opposite, that pride matters more than survival, that the market owes you a reversal, that you're smarter than the tape. Do you know where that road leads? Straight to ruin. I've said it before, and I'll say it again, the small loss is not your enemy, it's your best friend in disguise. It's the market whispering to you, you're wrong here, step aside. Ignore that whisper, and it turns into a scream. Ignore the scream, and it becomes a disaster. The longer you wait, the higher the price. So the medicine, bitter as it is, must be taken. Because in this game you don't die from one big punch, you die from the cuts you refuse to close. The blood drains slowly, quietly, and by the time you notice, it's too late to stop it. That's why the men who last are the ones who treat every scratch seriously, who never hesitate to stitch the wound before it spreads. And if you think you can escape that rule, if you think you can hold on just a little longer and somehow cheat the market's law, I'll ask you again, have you ever seen it work for anyone in the long run? The market doesn't care about your pride, it only cares about price. That's a truth every trader swears he understands. But when the time comes to prove it, most men collapse under the weight of their own vanity. They think the market is a stage for them to show off how clever they are, how well they can predict, how right they can be. But the market is no stage, and it has no audience. It's a machine that measures one thing and one thing, only the willingness of men to back their opinions with money. And money doesn't care about your feelings, your theories, or your pride. It flows where the tape demands it to flow. Tell me, have you ever caught yourself defending a trade the way a man defends his reputation? As though being wrong on the market was the same as being wrong in life. That's the trap. That's the poison of pride. Because when you tie your self-worth to the outcome of a trade, you stop looking at price and start looking at your reflection. And reflections don't move markets. Only price does. I've watched men lose fortunes, not because they lacked the capital or the opportunity, but because they confused the scoreboard with their own ego. They thought being right mattered more than following the tape. They held on to losers because admitting defeat felt unbearable. But let me ask you, what's worse, swallowing a small bruise to your pride or swallowing bankruptcy papers? Because that's the choice most traders face, and too many of them would rather ruin themselves than admit the market has proved them wrong. The market is the coldest judge you'll ever stand before. It doesn't hand out mercy, and it doesn't care if you've had a string of bad luck. It doesn't care if you've been studying charts all night, or if you've got mouths to feed at home. It doesn't care if you've had a run of winners and feel invincible. The only language it speaks is price, up or down, profit or loss. And when you ignore that language, because your pride insists you must be right, you're not trading anymore, you're gambling with your life's work. Think about it. If the market cared about your pride, Wouldn't it reward you for sticking stubbornly to a position? Wouldn't it bend to your conviction just because you refused to yield? But has it ever once done that for you? When your stock keeps falling, does it suddenly reverse because you shouted at the screen? Or because you wrote a convincing argument in your head about why you can't possibly be wrong? No. Price moves where it wants, with or without your approval. I remember once being long in a stock that I was absolutely certain would rise. I had the logic, the background, the story, everything lined up neatly in my head. And for a while, it did rise. But then, suddenly it turned. Not a little dip, not a pause, but a steady grind against me. I refused to sell. I told myself I can't be wrong. The market's just shaking out the weak hands. That's what pride told me. But pride doesn't pay. Price kept sinking. Every point lower wasn't just money gone, it was another nail in the coffin of my discipline. I stayed, I held, I prayed. And when I finally got out, it wasn't because I chose to, it was because I had no more choice. Pride had chewed through my account like a disease, and I had paid dearly for believing the market cared about my opinion. That's when I learned the lesson so many ignore: price is reality, everything else is imagination. You can imagine reasons, you can imagine reversals, you can imagine justice, but the only truth that counts is the number on the tape. And the tape is deaf to your pride. You've seen it in others too, haven't you? A man defending his losing trade with arguments that sound more like a courtroom plea than a strategy. It's undervalued. The fundamentals are strong. It can't go lower. Those are not trading decisions. They're prayers dressed up as logic. And they all come from pride, the refusal to admit the market is bigger than me, and I am wrong. Do you know what's strange about pride in this business? It's the only thing men cling to while everything else slips away. They'll watch their capital drain, their confidence crumble, their families worry, but they'll still cling to the one thing that does them no good, the belief that they can't be wrong. Pride keeps them chained to the very position that's destroying them. And when the final margin call comes, they're left with nothing but the memory of how badly they wanted to be right. Now, consider the opposite kind of trader, the one who kills his pride quickly, who doesn't argue with price, who treats being wrong as nothing more than a cost of doing business. That man doesn't bleed for long. He cuts, he moves on, he survives. Does he look foolish sometimes? Yes. Does he take losses? Of course. But he's still in the game. Pride hasn't put him out of business. And isn't that the only thing that matters, staying in the game? The paradox is this: the less you care about being right, the more right you'll end up being. Because you'll follow the tape, not your ego. You'll accept the market's verdict without argument. And in doing so, you'll keep yourself safe from the fatal wound that pride always delivers. Think of the market as a mirror. If you walk up to a mirror and see something ugly, does shouting at it change your reflection? No. The mirror shows what it shows. The tape is the same. It reflects price. It reflects the actions of millions of other men, each voting with his money. You are one of those men, but you are not the crowd. And the crowd is always bigger than you. The crowd will push the tape wherever it wants. And your pride, your stubbornness, your conviction, it means nothing to that crowd. Do you understand that? This is why I always say the market is never wrong. Men are wrong, constantly. But the tape, never. The tape shows the truth in numbers, and those numbers are carved into reality. When you fight the tape with nothing but your pride, you're not arguing with an opinion, you're arguing with fact. And fact wins every single time. So when you catch yourself clinging to a trade because you want to prove something, stop and ask yourself, prove it to who? Who's watching? Who cares? Do you think the market is going to send you a letter congratulating you for standing your ground? Do you think it will reward you with profit just because you refuse to back down? The market doesn't hand out medals. It only hands out profits and losses. And the trader who understands that leaves pride at the door and takes only what price allows him to take. You cannot bend the market to your will, but you can bend your will to the market. That's the only choice you have. And the moment you accept that the market doesn't care about your pride, you'll stop bleeding for it. You'll stop throwing good money after bad just to avoid admitting you were wrong. You'll stop defending the indefensible. And in that humility, you'll find survival. A losing trade never turns into a winner because you wish it so. That's the simplest truth you'll ever hear about this business, and yet it's the hardest truth for most men to accept. A trader will sit there, his position bleeding, and instead of acting, he starts wishing. He wishes the price back up to his entry. He wishes for a reversal. He wishes for the market to forgive him. But the market has never once cared about a man's wishes, and it never will. Price goes where price wants to go, and your wishing has no more power over it than a child's plea has over the tide. Haven't you ever caught yourself staring at the screen, begging silently for the next tick to turn in your favor? Haven't you ever watched your position sink, and instead of cutting it, you said to yourself, just let it come back to even, and I'll get out? That's the most dangerous lie a trader tells himself. Because what you're really saying is, I'm willing to risk everything I have for the satisfaction of being made whole again. And while you're wishing, while you're bargaining with fate, the tape keeps moving against you. It doesn't pause to listen. It doesn't care about your promises. The moment a trade starts going wrong, the market is telling you something. It's whispering the truth right there in black and white. But most men refuse to listen. They cover their ears with hope. They think hope will buy them time, that somehow, by the sheer force of wishing, the market will reverse and prove them right. But tell me, when has hope ever moved a price one tick? Have you ever seen a stock reverse because you prayed for it? No. The only thing hope does is paralyze you while your loss grows larger. I remember a fellow trader years ago, a man with more theories than discipline. He bought into a stock at 70, convinced it was a bargain. Within days, it slipped to 68. He refused to sell. It'll come back, he said. At 65, he was still calm. At 60, he was muttering about manipulation. At 55, he stopped talking altogether and just sat there staring at the screen. By 50, his account was gutted. Do you know what he said to me afterward? He said, I just kept wishing it would turn around. That was his entire plan, wishful thinking. And the market cleaned him out without even noticing. A losing trade doesn't turn into a winner because you wish it. It doesn't turn into a winner because you argue with it, or because you write down a dozen reasons why it should. The tape doesn't read your notes. The tape doesn't care about logic or fairness. It only moves according to the weight of buying and selling. And when that weight is against you, the only rational move is to step aside. Yet most men do the opposite. They cling harder. They double down. They say, if I just add more, it'll come back quicker. That's not trading, that's digging your own grave with both hands. Do you know what the real tragedy is? It's not the loss itself. Losses are part of this business. The tragedy is how many traders let a manageable loss become a disaster because they were waiting for a miracle. They confuse hope with strategy. They confuse wishing with action. And in this game, inaction is death. Every tick against you is another cut, another ounce of blood gone, and the longer you wait, the weaker you get. Now, why do men fall into this trap? Why do they keep wishing instead of cutting? Pride, yes, but also fear. They're afraid of locking in the loss. They're afraid of admitting defeat. So they pretend that if they don't act, maybe the problem will solve itself. It's like a man with a leaking roof who refuses to patch it because he hopes the rain will stop. Maybe it does for a day, but the damage is already done, and the next storm will finish the job. In trading, the storm never ends. There's always another tick, another move, another surprise. If you don't patch the leak, if you don't cut the loser, you'll drown. I've seen this pattern repeat so many times that I could call it the law of traders. A man buys, it goes against him, he wishes it back. It sinks further, he wishes harder. By the time he finally accepts reality, he's too weak to recover. And what's worse, once he's out, the pain of watching the tape afterward convinces him that the market has betrayed him personally. But the market hasn't betrayed him. He betrayed himself by thinking his wishes mattered. And let's be honest, haven't you done the same? Haven't you sat there, refusing to sell, just waiting for the miracle that never comes? Be honest with yourself. Every trader has done it. The difference between those who survive and those who go under is simple. The survivors learn the lesson. They learn that wishing is poison. They learn that the only cure is decisive action. They stop waiting for miracles and start cutting the moment the market proves them wrong. Think about the absurdity of it. If you went to a casino and lost a hand of cards, would you sit there and wish the dealer would reshuffle in your favor? No, the game moves on. The loss is gone. But in the market, because the tape keeps running, men trick themselves into thinking their wish has a chance. They believe the story in their head more than the story in the price. And that's why they lose. A losing trade is like spoiled fruit. The moment you realize it's rotten, you throw it out. You don't keep it on the table hoping it'll become fresh again. But in the market, men do exactly that. They hold on to rotten trades, convinced they'll ripen back into profit, if only they wait. And all the while, the stink grows stronger until it fills their whole account. Wishing is not harmless. It's not just wasted time. It's active destruction. Because every moment you spend wishing is a moment you could have spent cutting, regrouping, finding the next opportunity. While you're trapped in the prison of hope, the market keeps moving, and the traders who accept reality are already taking your money. They're on the other side of your wish, and they're cashing in while you sit there paralyzed. Do you know the greatest relief a trader ever feels? It's not catching a big winner. It's cutting a loser and finally being free of the weight of wishing. Once you cut, once you take the medicine, the wishing stops. You can breathe again. You can think clearly. But as long as you're holding on, as long as you're waiting for the impossible, your mind is chained, your capital is chained, and your future is chained. So remember, no amount of wishing can turn a loser into a winner. No amount of praying, no amount of reasoning, no amount of time. The tape will do what it does, and your job is not to hope, it's to act. The sooner you accept that, the sooner you stop bleeding. Time is the enemy of a bad position. I learned that lesson so many times, and each time it came with a price I'd rather not remember. You see, most traders treat time as their ally. They think if they wait long enough, the market will reward them, that patience will somehow turn a bad trade into a good one. But in this business, patience is a double-edged sword.